So now we're talking about portable mortgages. And so what exactly does that mean? Well, so what the Trump administration is evaluating is how you could take your current loan amount with your current interest rate and use it on the next house. So say you have a $400,000 loan balance at a 3% interest rate and you are ready to move to a seven or $800,000 house. You would take the $400,000 loan amount at your current interest rate, and then you would finance the gap or make it up in cash or whatever. There's so many variables to this, but the main one being that banks have to make money. So mortgages are liens against a property, and it has to be for a specific property. So that means that a bank now has to take the lien off of an existing home, put it on another home, and then all that has to be recorded. Well, all of that takes manpower, which costs money, which now means the banks are losing money just on like the paperwork side of it. On top of that, they're losing out on a new loan at current interest rates. So I don't see how a bank is going to agree to this or how this would work without substantial upfront costs to the consumer to be able to take the rate with them. It also does not solve the affordability problem because for most buyers who are entering the market, they're not going to have a mortgage. The first time home buyers that are struggling in this market don't have a mortgage to take with them. I don't know why we just can't lower rates. You know, in the fives, I think would do wonders for people starting to really, really move. However, in Pittsburgh, we're seeing about the same amount of transactions this year as we did last year. So we're still staying steady. But I worry that this kind of media tells people that you should wait and see if this is going to happen. And even if this did happen, it's not happening for a very long time. So if you need to move anytime soon, this is not going to apply to you.